What happens if you invest just $5 a day into VOO, the Vanguard S&P 500 ETF, for 114 days straight? Is it pointless? Or is this how real wealth actually starts? Most people obsess over the short-term returns, 30 days, 60 days, or even 90 days. But that is not where the real story is. For the last 114 days, I have been automatically investing $5 every single market day into VOO using dollar cost averaging. No reacting to news, no timing red days, and no skipping red days. In this video, I'm breaking down exactly how much I invested, exactly how much I made, and most importantly, whether this system is working the way long-term investors hope it does. And I'll tell you right now, the return number is actually the least important part of this experiment. Because what's happening under the hood right now, that's where long-term investors are made. Hey guys, welcome back to another video. My name is Paul and I break down investing, index funds, ETFs, and long-term wealth building without the hype. Before we get into the video, make sure you smash that like button and subscribe for more future content just like this. It really does help me out more than you think. Let's get right into it. So just some quick context for what I've been doing. Here's the setup. I invest $5 every market day into VOO, and that's it. No changes, no reacting to headlines, and no pausing during volatility. We are now 114 days in, which comes out to roughly around 80 market open days. That puts total contributions to VOO at around $400 invested so far. The goal was never short-term performance. It's to build a system that compounds for years, because anyone can invest when it's easy. The real test is whether you keep going when it's uncomfortable. Now let's get into why $5 a day still matters. And yes, it's just $5. But that's intentional. $5 is small enough that volatility doesn't feel emotional, but consistent enough to build a real investing habit. Because if you can automate and stick to $5 a day, you can scale that to $50, then $100, then even more. Most people don't fail in investing because of bad ETFs. They fail because they stop. And this series is going to prove that process beats intensity. And I'll be transparent. Before I committed to rule-based investing and long-term investing, I also used to chase fast money. I bought things because they were moving, I reacted to headlines, and I tried to outsmart the market. Sometimes I got lucky and it worked, but it always created stress for me. I was second guessing myself, I was inconsistent, and I was trying to beat the market, which requires perfection. But the best part about building a system is that it only requires discipline. This is why investing $5 a day removes your ego completely. There's no predictions, no urgency, just repetition and consistency. And repetition compounds. Now, before we go any further, if you're wondering how I'm actually running this experiment without logging in manually and buying the ETF every day, I'm using the SoFi investing app. SoFi allows automatic daily investing, fractional shares, and recurring deposits, which makes investing $5 a day super easy to maintain. If you want to get started with your investing journey, you can get $25 for using the link below to sign up for SoFi. No pressure at all, it's just an easy way to start small and stay consistent. Now let's go over a recap of what strategy that I'm using. This entire strategy rests on two things: fractional shares and dollar cost averaging. Instead of trying to time the perfect entry, I invest a fixed dollar amount on a fixed schedule. I buy when prices are high, and I also buy when prices are low. And there's absolutely no emotions involved. In the long term, this smooths out the average cost automatically, and this is how long-term portfolios are built. Now, the biggest question you're probably wondering is, what can $5 a day turn into if you're very consistent? Let's take a look at the exact numbers for investing $5 a day for the long term. So let's take a look at this investment calculator, which will show us exactly how much our money could grow to potentially. So let's look at the starting amount. Let's say you start with $0, you're brand new to investing. You're going to invest for 30 years. Let's say the return rate is around 8% on average, which is on par with S&P 500. Let's say you add $100 per month, which is $5 per open market day. And once you calculate it, you can see that your money will grow to over $140,000. Now let's look at the starting amount, which is $0. The total contributions that you will contribute is just $36,000, but the total interest that you make will be over $100,000. That is the power of long-term compound interest. Now let's look at the accumulation schedule down here. You can see here in year one that you would deposit $1,200 and you would earn $43 in interest, bringing your ending balance to $1.2K. Now, if you look at 2 through the rest of the years, you can see that your interest compounds over time as well as your ending balance. And at the end of your 30-year mark, you're depositing 1.2K the same, but the interest you're earning is over $10,000, and your ending balance will be over $140,000. That is the power of compound interest and being consistent. This really shows that habit matters more than the amount. Now let's bring it back to the present, because we're not 30 years in, we're 114 days in. Between my last update at day 60 and day 114, the market didn't move in a straight line. There were green days, there are also red days. If I had paused contributions during the uncomfortable moments, the results you're about to see would be different. That's not opinion, that's pure math. So let's take a look at what exactly happened. So let's take a look at my portfolio to see how much it's actually grown in the past 114 days. So we are here in the VOO screen in SoFi. If you scroll down here, you can see my investments. The total shares I own is 0.67557, with the total value being $424.98, with today's return being down $3, but the total return being 0.05%. The average cost is $628 per share, and the total dividends received is 50 cents. Now here's what stands out though. This performance isn't dramatic, it's controlled. If you scroll down here, you can see that I invest daily into it, and you can see that some shares were bought at higher prices and others at lower prices. But the average cost continues normalizing, exactly how dollar cost averaging is designed to work. The account may slightly be up or slightly down depending on the market, but that's not the point. The point is, the system is functioning, and that matters more than short-term fluctuations. At 114 days, something important has happened. The habit's locked in, automation is doing the work, and emotion has been removed. And from here, time becomes the primary driver. Because this exact same process, unchanged over 5, 10, or 20 years, is how ordinary income builds meaningful wealth. And this is why I emphasize automation so much when it comes to long-term investing. If investing feels complicated, it's usually because you're doing it manually. Now with the SoFi app, you can automate daily investing, buy fractional shares, and let the system run in the background without any stress. If you've been waiting to start because you think you need a lot of money, let me give you a reality check. You don't. Use the link below to sign up, grab your $25 in free stock, and start building your own habits. That's the 114-day update. And honestly, this is where it starts getting interesting. Because the first 100 days builds discipline, the next 1,000 builds wealth. I'll be back with more updates and eventually the 1-year breakdown so you can see how this evolves long term. Always keep in mind, wealth isn't built through intensity, it's built through consistency. If this video helped you think differently about investing, hit the like button, subscribe, and let me know in the comments. Do you invest at least $5 a day? And if you don't but you want to start, use the link to sign up and get started. Always remember that your life is a masterpiece, so let's unlock your full financial potential together. Thank you so much for watching, and I will catch you in the next video. Take care.